Imagine waking up every single month, knowing that a steady, reliable stream of income is flowing directly into your bank account, without lifting a single finger. No early morning alarms, no stressful commutes, and no office politics to deal with, just financial independence and peace of mind. This isn't some impossible dream or get-rich-quick scheme. It's the power of dividend investing, a strategy that's helped countless people achieve financial freedom. But here's the burning question. How much money do you need to invest to earn $500, $2,000, or even $5,000 a month in dividends? In this video, I'm going to break it down step by step with real-world numbers, strategies, and insights to help you plan your path toward financial independence. By the time you finish this video, you'll know exactly how much capital you need to build, the dividend yields to aim for, and the shortcuts you can take to accelerate your journey. You're about to discover strategies and secrets that most investors overlook, secrets that could shave years off your timeline to financial freedom. So stick with me, because you're not going to want to miss a single detail of this guide. Chapter 1. Understanding dividends and yield. Let's start with the basics. What exactly are dividends? Dividends are payments made by companies to their shareholders, typically distributed from the company's profits. Think of it as a thank you payment, a tangible reward for trusting the company with your money and owning a piece of it. Dividends provide a steady stream of passive income, making them incredibly appealing for anyone who wants to build a reliable financial safety net. But there's a key term you need to understand: dividend yield. This is a percentage that reflects how much a company pays out in dividends compared to its share price. For example, if you buy a stock priced at $100 and it pays an annual dividend of $4, its dividend yield would be 4%. This metric is crucial because the yield determines how much you'll earn on your investment and how much capital you'll need to hit your income targets. The formula to calculate how much money you'll need to invest is straightforward. Investment needed equals desired monthly income x 12 / dividend yield. This formula will be the foundation for everything we discuss in this video. By plugging in your income goals and adjusting for different dividend yields, you'll get a clear picture of the investment required to meet your passive income targets. Chapter 2. How much for $500 a month? Let's tackle the first milestone: generating $500 per month in dividends. This amount may seem small, but $500 a month can cover your groceries, utility bills, or even contribute to your rent or mortgage. To earn this amount, you'll need $6,000 annually in dividends. But how much you need to invest will depend entirely on the dividend yield you're targeting. At 3% yield, a 3% yield is typical for blue-chip stocks like Johnson & Johnson, Procter & Gamble, or Coca-Cola. These are companies with decades of stability and consistent dividend payments, making them reliable but not high-yielding. Investment needed: $6,000 / 0.03 equals $200,000. At 5% yield. With a 5% yield, you're looking at investments in sectors like utilities or real estate investment trusts, REITs. These are still considered relatively safe, but offer a higher payout. Investment needed: $6,000 / 0.05 equals $120,000. At 8% yield. Higher yields, often found in industries like energy infrastructure, closed-end funds, or niche REITs, can dramatically reduce the capital required. But with higher yields come higher risks, such as dividend cuts or stock price volatility. Investment needed: $6,000 / 0.08 equals $75,000. As you can see, your required investment decreases significantly as yields increase. However, this is where most investors make a critical mistake: chasing high yields without understanding the risks. The key is to strike a balance between yield, stability, and long-term growth. Chapter 3. $2,000 a month, the freedom milestone. Now let's aim higher: $2,000 a month in dividend income. At this level, you're talking about covering serious expenses like rent, mortgage payments, or even traveling frequently without worrying about your job. To achieve $2,000 a month, you need $24,000 annually in dividend income. Let's break it down based on different yields. At 3% yield, for a 3% yield, which you'd expect from ultra-stable blue-chip companies, the required investment grows significantly. $24,000 slash 0.03 equals $800,000. At 5% yield at 5%, you're moving into a mix of higher yielding, but still relatively safe investments, such as utilities and established REITs. $24,000 slash 0.05 equals $480,000. At 8% yield. At an 8% yield, which is achievable in riskier sectors or specialized funds, the amount of capital required drops dramatically. $24,000 slash 0.08 equals $300,000. Reaching $2,000 a month may sound daunting, but remember this. You don't need to invest the full amount all at once. Through consistent monthly contributions, dividend reinvestment, and market growth, you can close the gap faster than you think. Chapter 4. $5,000 a month, luxury and full freedom. This is the ultimate goal for many. A full $60,000 annually in dividends. At this level, you're financially independent. Work becomes a choice, and you can spend your time pursuing your passions, traveling, or simply relaxing. Let's calculate what it takes to achieve this milestone. At 3% yield, if you're sticking with ultra-safe, low-yielding blue-chip stocks, you'll need to invest a staggering amount. $60,000 slash 0.03 equals $2 million. At 5% yield. With a 5% yield, the required investment becomes more manageable, but still substantial. $60,000 slash 0.05 equals $1,200,000. At 8% yield. If you're comfortable with the risks associated with higher yielding investments, the required capital drops significantly. $60,000 slash 0.08 equals $750,000. Reaching $5,000 a month in dividends isn't easy, but it's entirely possible with a disciplined approach, strategic investment choices, and a long-term mindset. Chapter 5. Strategies to reach your goals faster. Start early and reinvest dividends. Time is your greatest ally in dividend investing. The earlier you start, the more time compounding has to work its magic. Reinvesting dividends allows you to buy more shares, which then generate even more dividends. Over years or decades, this snowballs into a massive stream of passive income. Focus on dividend growth stocks. Instead of chasing high yields, prioritize companies with a history of increasing their dividends annually. These dividend growth stocks may start with a lower yield, but their payouts can grow significantly over time, outpacing inflation and providing a rising income stream. Use tax-advantaged accounts. Leverage tax-advantaged accounts like IRAs or 400 and Onyx, or equivalents in your country. Dividends grow tax-free in these accounts, accelerating your progress toward your income goals. Diversify across sectors. Avoid putting all your money into a single sector. Diversify your portfolio across industries like healthcare, utilities, technology, and real estate. This reduces risk while maintaining a steady flow of income. Consider monthly paying dividend stocks. Most dividends are paid quarterly, but some companies and funds pay monthly. These can provide a more consistent income stream that matches your monthly expenses. Examples include Realty Income, Stag Industrial, and EPRA Properties. Chapter 6. Risks to watch out for. Dividend cuts. Be cautious about companies offering extremely high yields. If a company's dividend payout ratio exceeds its earnings, it risks cutting dividends, which can hurt both your income and the stock's price. Inflation. Dividends that don't grow over time lose purchasing power due to inflation. Focus on companies with a track record of increasing dividends consistently. Market volatility. Even dividend-paying stocks are subject to market fluctuations. While dividends can provide a cushion, you should be prepared for short-term volatility in your portfolio value. Chapter 7. Final Thoughts. Hitting $500, $2,000, or $5,000 a month in dividend income isn't just a dream. It's a math problem with a solution. The key is to start, stay consistent, and make strategic investment decisions. Whether you're just beginning your journey or already making progress, remember that every dollar you invest is a step closer to financial independence. Now, I want to hear from you. What's your monthly dividend goal? And what steps are you taking to achieve it? Let's start a conversation in the comments below. Don't forget to like, subscribe, and hit that notification bell to stay informed about more strategies for building wealth and achieving financial freedom. See you in the next video.